So, unless you've been living under a rock, I'm sure that you've seen all of the headlines when it comes to the economic issues that we're dealing with due to all of these different tariffs. And I wasn't even going to make this video, but I am someone that has made a few different videos now when it comes to how you can start your investing journey. So I thought it was only right for me to give you my opinion, my thoughts on what's happening and whether or not this is actually an opportunity when it comes to capitalizing and making money. Now, before I get into anything, I do need to say that this video isn't financial advice. All I'm going to be doing today is sharing my own personal opinion on what I'm doing when it comes to all of my different investment portfolios and the advice that I would give myself back when I first started investing so that I could take advantage of the times that we're in right now. And just to give you a general overview of what this video is about, basically right now there's a lot of uncertainty when it comes to the stock market. Things have crashed and a lot of things that was priced really high 2 weeks ago, 3 weeks ago are now priced at a discount. And even though, yes, no one knows exactly when things are going to recover, there is ways that you can, prepare yourself as a beginner with the help of AI tools similar to DeepSeek. If you're someone that's confused on how the stock market works, how all of these different crashes work and how you can make money from them, this is the video that you need to watch. Now, before I get into anything, I just want to quickly explain what the tariffs are, how they work, and how they've caused all of these different economic issues that we're in right now. So in simple terms, tariffs are extra taxes placed on goods that are imported from other countries. And during Trump's first presidency, and again now in 2025, he introduced or increased tariffs on products coming from places like China, Mexico, and the European Union. The goal was to make foreign goods more expensive, which would encourage Americans to buy from US companies instead. But in reality, these tariffs often led to higher prices for businesses and consumers in the US, which ultimately triggered tensions with other countries. And the thing about the stock market is that it doesn't like uncertainty. So when all of these different tariffs were announced, a lot of investors panicked and it caused mass sell-offs. And bear in mind that at the time of me making this video, all of this started taking place probably 3 weeks ago, 4 weeks ago, but there has been some updates in terms of Trump putting pauses on some countries when it comes to their tariffs. The only country that doesn't have a pause at the time of me making this video is China. And stick with me because this is going to be important as we go through this video. And the reason why I believe that this could be an opportunity to make money, even if you're new to investing or you've been investing for many years, is because if we look at previous crashes throughout history, we're going to see that things have always recovered and we're going to see that people have been able to make thousands of dollars and even become millionaires. And of course, I am aware that history doesn't always dictate what's going to happen in the future, but we can always use it as a guideline for us to kind of understand what's happening and, what moves we can make. Because for example, if we just take a look at this diagram or this image that you can see on the screen, in 1920, there was the Great Depression that caused a 89% stock market crash. The reason why this crash happened is because stock prices rose too fast and people started borrowing money to invest. And when the prices started falling, there was panic selling that led to a massive crash and an economic depression. This took 25 years to recover. And one of the next crashes throughout history was Black Monday. With this one, there was a 22% downturn and this one took 2 years to recover. But what's interesting is that if someone invested $5,000 during this particular crash, they would have been able to turn that $5,000 into $35,000 at the next peak. The next crash after that was the dot-com bubble, and this was because investors started putting a lot of money into internet companies, even those that didn't have any profit. And when people realized that many of the internet companies around this time were worthless, it caused a massive sell-off which lasted 7 years. The next crash after that was the 2008 financial crash. This one led to a 54% downturn. It took 4 years for things to recover. If someone put $5,000 into it, they would have been able to turn that into $28,000. After that was the next biggest crash, which a lot of you probably remember because this is probably when you started investing in 2020. I personally know so many people that invested during this time and they were able to make life-changing amounts of money. And, things recovered after 5 months and continued rising. And of course, the next crash that we're dealing with right now as we speak is due to the Trump tariffs. And the main point of me showing you this is that yes, there's always been these different crises that have been happening, throughout history, all of these different economical issues that have caused millions of people to panic, but it's those that have been able to withstand the issues, those are the ones that have been able to come out on top. And this could be seen if we look at the chart for the S&P 500. Now, the S&P 500 is tracking the top 500 companies in the USA. And just by looking at it, we can see that there's these different peaks, all of these different highs that have been happening. It goes down, it goes up, it goes down, goes back up again. You know, it went all the way up throughout 2023, 2024. And right now in 2025, it's gone back down. And when it goes down like this, you know, people assume that it's never ever going to go back up. And of course, I'm not a psychic. You know, it may stay down. It may be like this for the next year, 2 years, 3 years. But that's why it's important for you to have a solid plan in place so that when things do pick back up, you're going to be the one that's going to be able to look back and say that you made money. And if you're a complete beginner and you're new to all of this, I would say that one of the easiest ways for you to come up with a solid plan is to use an AI tool. There's a number of different ones out there that you can use, but in this video, I'm going to be using DeepSeek because it was made by a hedge fund owner and it was specifically made when it comes to doing analytics and, you know, all of these different type of things. So I believe it's one of the best suited ones for what we're trying to do today. So you can use it for completely free, of course. All you need to do is create your account and then click on start now. This is what the interface is going to look like, and all you got to do is enter a simple prompt. So the prompt that I'm going to enter is going to be something like, I want to take advantage of the downturn that we have seen in the stock market due to the Trump tariffs. I have $3,000 to invest. I need you to give me a solid investing plan and what key indicators to look out for and when I should start investing. I'll be using Trading 212. Keep the plan simple and easy for me to follow. So Trading 212 is the platform that I use when it comes to, you know, buying into all of these different companies, buying into index funds, investing into US based companies, UK companies, and just companies all around the world. So that's the reason why I put it there. Whichever one that you want to use, you could just replace it, or you could just tailor this prompt in any way that you want. Maybe you've got less than $3,000, maybe you've got $10,000. Whatever the case is, I'm just going to be using $3,000 as an example, and then I'm going to click on submit. And as you can see, it's already gone to work to start analyzing and thinking about what I entered so that it can come back with a solid plan that I'm going to be able to follow. Okay, perfect. So it's now come back with all of the steps that I need to take. Step 1, step 2, step 3, so on and so forth. And for step 1, it's saying that the main indicator that I need to look out for is all of these ones here, but specifically the market volatility one, VIX. It's giving me information on, you know, what to look out for specifically when it comes to this chart. And as we can see, it has risen. And when it's highlight this, it indicates that there's extreme fear in the market. And only when it starts to come down, that could be a great buying opportunity. And the main point of this is that you guys need to understand that just because the market has taken a massive dip, it doesn't mean that you should jump straight into it right now. Using tools like DeepSeek, you're going to be able to get an understanding of what to look out for when it comes to the best time for you to start deploying your money. Step 2 of this investing plan is to start allocating your money in your portfolio. So as we can see with this $3,000 example, it's letting us know that 60% of it should go into ETFs, specifically ETFs like the S&P 500. It's also coming back and letting us know that maybe we should put 40% of our money into individual stocks, you know, companies like Apple and Microsoft. And it's also giving us a entry plan, risk management, and an exit plan. So basically the reason why I've shown this to you in this video is because, you know, this is one of the best ways to use AI tools for you to figure out how to structure an investing portfolio, especially during times like this where everything is discounted. So again, I'm not saying that you should start investing straight away as soon as you finish watching this video, but if you're someone that has always wanted to start investing, maybe you've got extra income coming in and you want to put it to work, what better time to get started than when things are really low? And to be honest, this is just something that I'm doing right now. Even though I've been investing for the past 5-6 years, I like to use times like this that we're in right now as a way for me to be a little bit more aggressive and get things at a discount so that I can make more money over the long run. And as I mentioned before, one of the investment apps that I like to use is Trading 212. This video isn't sponsored, but the reason why I recommend it is because you can set up something called a pie where you're going to be able to add whatever instrument that you want. You know, if you want to add a certain percentage of the pie in a specific stock or maybe into a specific ETF. For example, if I wanted to add the S&P 500 to this pie, I'm going to be able to do it just like that. If I wanted to add Apple as well, I could just select it just like this, as well as Microsoft. Let's just go back and select Microsoft. Not saying that these are the ones that I'm going to be investing into. It's only because DeepSeek mentioned it. So if I just add it to the pie, and right here, as you can see, you're going to be able to set the allocation. If you want to put, 50% or 60% into the S&P 500 and maybe 20% into Apple and 20% when it comes to Microsoft as an example. And from there, it's going to be able to give you an idea of your average yearly return. So this is definitely the app that I'd recommend that you check out if you want to set up, automations, dollar cost averaging, so that you don't have to sit here buying into all of these different instruments and assets every day. Everything is going to be automated so that you don't have to lift a finger. But overall, one of the most important things that you need to remember from this video is that yes, making a passive income from investing is great, but the most important thing is to make sure that you've got active income coming in. If you don't have active income coming in, then of course you're not going to be able to pay for the day-to-day necessities, food, housing, so on and so forth. But it's also important for you to have active income so that you're going to be able to invest your money in the right way without stressing too much. Even though my portfolios have gone down by a considerable amount, because I've built up my active income streams, it doesn't really matter too much because there's always going to be money that's coming in. And that's why it's very important for you to, build up active income streams where you're going to be able to automate them. And what you can see on the screen right now are the active income streams that I've built up that enable me to make over $60,000 every single month minimum. Things like email newsletters, income from affiliate websites, building up multi-income e-commerce stores, selling digital products, operating and managing a few different YouTube channels. The ultimate goal is to make money from income streams just like this because they're scalable. You take full control over them. You're going to be able to, build them up to a decent amount. And then from there, that's when you're now going to have enough disposable income for you to invest into the stock market. So if you wanted to watch a recent YouTube video that I made not too long ago where I break down exactly how you can get started with side hustles just like this, I'm going to leave that video right there. Be sure to watch that straight after this because that video has helped out so many people. And I'm sure if you're able to watch it from start to finish, it can also help you out too. But other than that, guys, I'll catch you on that next video. Make sure you stay safe out there. Peace.